Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video I am going to talk about what is momentum trading and how to select stocks for momentum trading. Before going through that, please like and subscribe to the YouTube channel and help us grow this community together. Thank you. What is momentum trading? Momentum trading is a trading strategy in which traders buy stocks at a higher price and sell it at even a more higher price. For example, if a stock is trading at all-time high or at 52-week high, that means it is already a trending stocks, and you buy those stocks and sell it at even more higher price. So that is known as basically a momentum trading. The goal of a momentum trader is to use a volatility to find the best short-term uptrend stocks and sell them as soon as they start to lose the momentum. The trader will look for next short term uptrend stocks and then keeps on repeating this type of trading. So this is a advanced form of a swing trading strategy where you have to understand how long to hold a position, when to exit, when to enter in a short term, when to enter into a news driven stock, and etc. So risks of momentum trader include moving into a stock position too early, closing out too late, and getting distracted and missing key trends and technical deviations. If you're a momentum trader, then you need to identify the trend of a stock, and for that we are going to use the 21 EMA. The 21 EMA is the moving average of the past 30 days of trading. So whenever the 21 EMA is sloping upwards, it will be called as a short term uptrend. Whenever the 21 EMA is sloping downwards, it is known as a downtrend, and whenever the 21 EMA is sideways, it is called as a consolidation. For example, we have this moving average that will be getting plotted on the chart. When the 21 EMA will be sloping like this, then we will call it as an uptrend. Whenever the moving average will fall like this, that is known as a downtrend, and whenever the moving average will stay flat like this, then it will known as a sideways trend. So how to apply that moving average in the trading view platform? So go to the indicator section, type here moving averages, and you will find it moving average exponential as an indicator. Click on this indicator, select the chart and change the setting to the indicator and type here 21. So this is how the 21 EMA will get plotted on your chart. So in this presentation, we can see how the moving average will act as a support and resistance in a trending stock. So for example, in Amar Raja battery, we can see that the stock is falling continuously, and hence the 21 EMA is acting as a resistance to that stock. And similarly, if we see the example of PT Engineering, where the stock is trending upwards, the stock is always pulling back to the moving average and again trending upwards. So that was an example of an uptrend. And ADF Foods, where the moving average is staying sideways, and hence the stock price is moving around the moving average. So we are only going to select stocks that are clear in uptrend. Okay, so we are simply going to use a trend following system to buy and sell stocks. Works well in trending market and trending stocks. Ideal place to sell a stock is when it has moved more than 15% away from the 21 EMA in 3 days, which we are going to look in the charts. And risk increases the farther you buy from the 21 EMA. That means if you buy a stock that is too much extended, then you will be paying a higher price for that particular stock. So what is a trending structure? For example, you need to identify the trend of a stock in a clear way. So whenever a stock is moving in a zigzag manner and in an uptrend, so it will form a structure of higher high, higher low. So this is known as higher high, and this will be known as higher low. So this is a clear uptrend of a stock. So a particularly you can also select a stock, for example, which will be in a downtrend. So this will be known as a lower high and lower low structure, where the highs will be little lesser and the lows will also fall more. Okay, so this is a trending structure in a downtrend, and this is a trending structure in an uptrend. We are going to select stocks that are only in an uptrend and that are forming the structure of higher high, higher low. Okay, so we are now going to use the second indicator, also known as the relative strength indicator. It is going to help us to identify the strength of a stock. So a stock that is having a high relative strength means that the stock is outperforming the broader market by a relatively large amount. What does outperformance mean? For example, Nifty is giving me a percentage of 8% return, and if stock A is giving me a return of 10%, that means the stock A has outperformed the broader market. And this indicator will have a zero line and a positive line and a negative line. So if we draw the indicator, and how does it look? There is a zero line, and if the stock is underperforming the broader market, then it will show in a red color, for example, like this. And if it is outperforming the broader market, or for example, it is giving more returns than the broader market, then it will show in the green color. And if it is moving upwards and giving much faster returns than Nifty, then the relative strength line will be increasing like this. And if it is falling, then the performance is slightly decreasing. So we are going to select the stocks that where the relative strength line is continuously increasing and in green color, to identify the potential super stocks. How to apply relative strength indicator in TradingView platform? Go to the indicator section, type here relative strength, and you can see by numerous people, it has been coded by numerous people. So we will select by Bharat Trader and select this. Sorry, select this on the chart, and now on the chart you can see a something like this. Now we will change the settings to 65 on this period. So what does 65 signify in the chart? 65 means we are going to check the relative strength of a stock for the past 90 days of trading. So in past 90 days there are around 65 trading days. Okay, so in past 3 months there are around 65 trading days, and hence we are only looking for those stocks that are outperforming the broader market for more than 65 days or for more than 3 months in total. So how are we going to enter into stocks? We are only going to enter in those stocks that are near 52-week high or near 4-year high breakout stocks, so that we are entering into those stocks that are having high momentum. So I will be sharing the screener in the description below. Kindly check it out. So if we select this, then we can see a screener that gets opened, and we can see numerous stocks that are there after this screener. Okay, so we are going to select those stocks to identify the swing trading stocks. Okay, now let us go through what is the stock selection criteria and what should be the proper analysis before buying a stock. So we are going to pick the stocks that are near 52-week high, stocks that are near all-time high, stocks that are staying above 21 EMA, stocks that where high relative strength line and the relative strength line is moving upwards, and stocks that are giving volume burst while breaking out, so that we know the bigger players are entering into that stocks whenever the stock is breaking out with high volumes. Okay, so what are the buy rules for entering into this strategy? So enter stocks on breakout of 52-week high. Stock should be in an uptrend and have higher high higher low formation for better win rate. Volume should be high on breakout, and stocks generally retest the breakout area. Hence, safe traders should add 50% position on breakout and 50% position on retest. Momentum is highest in RS positive stocks where RS is increasing and is positive from a very long time. For example, in this chart, the RS in during this period was continuously increasing and decreasing, but in this period the RS is now increasing. So we have to look at those stocks that where RS line is increasing and is positive for a very long period of time. So we have seen the buy rules. Now momentum, generally what is momentum trading? Where the momentum lies only for 2 to 3 days, right? So momentum stays only for 2 to 3 days and then the fades away, or the stock pullbacks to the breakout area to take support. Hence, main aim as a momentum trader is to catch the quick moment in 2 to 3 days and get out before a pullback. Okay, so if you don't want to wait in the pullback, then your main aim is to just directly take a target of 10 to 15%, enter into trade and exit before your stop loss hits or before the retest happen. Selling as price goes up is very important for momentum trading. That means as soon as the price is hitting 5% or 10% gain, you have to keep on selling the stock in some percentages, so that you don't get stuck in a reversal. One shouldn't wait for price reversals, otherwise you may lose all your gains. That is a very important thing, because you never know where the reversal is going to happen. So for example, if we look at this chart, the Ganesh housing chart, we can see, for example, this is a chart of Ganesh housing where the stock had broken out of a 52-week high. Okay, so during the breakout, we always have to look at the volumes of the chart. Now we can see that there was huge volume surge in this. The stock had broken out of a 52-week area now, and the relative strength line was in green from a very long time, and the stock was outperforming the markets for a very long period of time. So in this case, as there are two types of momentum trading, if you want just quick returns of 5 to 10%, then that is a quicker type of momentum trading, where you just enter into stock, where wait for 1 or 2 day and exit as soon as you get a quicker gain of 10 to 15% and then re-enter again. So in this case, you entered here and exited at 10 to 15% gain, and you when can you take a re-entry? Whenever the stock is again breaking out of a new high. Okay, so a momentum trader generally will not ride this trend fully and wait for a pullback. Now if you want to have a safer trading, then you can enter into this stock at 50% position, and safer players can enter the rest of the 50% position on the pullback on the 21 EMA, so that you can add the further quantity on. Now there are also other types of momentum trading where you can wait for a pullback also until and unless your stop loss gets hit. For example, momentum trading for a bigger time period is keep holding the stocks till it is above the 21 EMA. As soon as exit as soon as the stock breaks the 21 EMA, even if the RS is positive or the relative strength is positive, and momentum fades a little when the stock breaks the 21 EMA, and now another stock should be picked for your trading. For example, in case of Vishnu Chemicals, you entered the stock on the 52-week high breakout above the 21 EMA, and as the RS was also increasing. Now you keep holding the stock unless and until the 21 EMA is going to break down. Okay, so this was a trade where you captured around 22 to 23% as soon as in a shorter period of time. So in case of KPR Mills, if you had entered on the 52-week breakout and held the stock until and unless the stock had broken the 21 EMA, you would have made a quick return of more than 40% in a month or so. Okay, so this is how you can enter into stocks that are breaking the 52-week high. Looking at the volumes also, you should understand the volume activity before entering the stock, and you should hold the stocks until and unless the stock is breaking the 21 EMA to avoid multiple trades. So that if you hold the stock, if you hold the stock, if it is trading above the 21 EMA, that means the stock is in a good strength, so you can hold the stocks. So for example, in case of Gujarat Fluorochemicals, you entered the stock here, and in this case you had to exit the stock from in cost to cost. So there will be many examples where you will enter the stock at a very high price, as we are trading into momentum stocks, and you have to book losses. For example, if you check the chart of Sonacoms, if you had entered here on the breakout of 52-week high, for example, then you had to book loss on the very few next days. Okay, so this was a loss making trade. And for example, in case of Jindal Stainless Steel, if you had entered here and exited here, then that is not an issue. You always have to keep in mind, whenever you are making profits, your profit should be in the percentage terms of 15 to 20%, and whenever you are making loss, your loss should be capped to 5 to 8%. And hence, even with 50% win ratio, using this strategy, you can make a decent amount of money over a period of time. The only thing is, don't get carried away, or don't get depressed if you are not able to make profit on the very first trade. So all trading is all about probability, and if you take 10 trades, definitely you can make money out in 5 of the trades with a risk to reward of 1:2. So keeping this in mind, you have to take trades whenever a breakout is happening on the stock. For example, if we check the stock, if we check the watch list randomly, in case of FCL, for example, this was the 52-week high. Okay, so now this was the 52-week high. Now if we had entered here in the 52-week high and kept holding the stock until and unless it is breaking the 21 EMA, where here the 21 EMA is not broken. Okay, so you always have to wait for a closing below the 21 EMA, because in this market the intraday volatility can hit you very hardly, and hence wait for closing below the 21 EMA decisively and then exit the stock. For example, if we check the Gufic Bio chart, if we had entered on this 52-week high breakout, then we would have exited here with a minor gain or a minor loss, whatever. So the probability of profits are much higher, and the percentage gain is much higher in winning stocks, and the percentage you lose in a loss making trade will be much lower. And hence, how this is how you can utilize the screener also to identify 52-week high breakout stocks and enter during the day, so that you don't miss the gain entirely. It is very important to buy stocks as soon as they are breaking out. So for example, if the stock is breaking out of, this is the resistance line, and if the stock is breaking out of the resistance line, you should not buy the stock randomly at any levels. So your entry level should be near the breakout region only, and that should be around 2% near the breakout region, so that your stop loss is not that much of big, and you don't lose much whenever your stop loss gets hit. So that's it for momentum trading, and I hope you like the video. So if you like the video, please share it with your friends and like and subscribe to my YouTube channel.